Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday time. It's a great day to be in the market, that's for sure. I'm going to start with the usual global crypto flows report from CoinShares, positive 932 million, which means we did have some outflows globally, mostly from Hong Kong, I believe. We'll take a look at that in a second, but very positive, very much what we want to see here. What's more important going forward isn't just a couple weeks of mega positive moves. It's just continuous. We'll take 200 million a week, right? It doesn't need to be big. It doesn't need to be a lot. We don't need all of these products exploding in AUM. It's only going to take a little bit to keep chewing at price higher, higher, higher. So it's very encouraging to see flows flip from negative to positive once again in a big way. One thing I have noticed is the BlackRock product IBIT has actually taken a back seat a little bit to ARK, to Fidelity, even Bitwise nipping at its heels as far as just inflows on a weekly basis. That's going to change over time, probably, but just kind of an interesting like inside baseball, which sales team is winning, which product is capturing the hearts and minds of wirehouses and for whatever reason, right? A lot of the ARK buying is from Cathie Wood and their products. Interesting little competition. Nonetheless, more flows out of Ethereum. Don't have good news for you on that front. I don't know when the last time I was a ETH BTC bull. It's been a couple of years. That isn't going to change anytime super soon unless ETFs get approved, which they probably will not. Even if ETFs are approved, selling ETH is going to be a tough ask. So just keep that in mind. The holy grail is not having the product. The holy grail is seeing the flows. Bitcoin has both, ETH has neither, hence ETH BTC. A little bit into Sol, some out of multi-asset, and a nice little slug into Chainlink there. A lot of other products just looking more attractive to institutional players, apparently, than Ethereum. Looking at the country flows, there's the Hong Kong, negative 82 million. They really have not seen inflows at all. At least the US products had this benefit of having a positive market, having wall-to-wall news coverage. The Hong Kong stuff, I'm guessing, it's taking a backseat to a lot of other stuff right now. In that region, it's a smaller market anyway. Something else to consider with the ETH ETFs. Grayscale's product, ETH, isn't as large as GBTC was pre-conversion, but post-conversion, you will probably see ETH coming out of that product, just as you did GBTC. Something else to think about. What are the ETH fees post-conversion? Have they learned their lesson at Grayscale in regards to fees and flows? Right, these are all just like further game theory things to think about, because that's going to affect the ETH price just like it affected the Bitcoin price initially. But I don't think we see ETF approvals for ETH this week. I think it's going to take a court case. I think it's going to take time. Looking at 30-day cumulative flows, slowly starting to tick positive again. It's like that meme with the face and the 1%, right? We're almost there on the positive 30-day cumulative flows. What we saw in 2020 was just continuous GBTC flows. A lot of this was the GBTC premium trade, along with some other stuff globally. But great seeing flows slowly tick back up. Bitcoin having quite the day here, back above the 8-hour cloud, has been above the daily cloud. Trend metrics flipping bullish on various time frames. Covered that yesterday. This looks very good. I fear that we're sort of setting ourselves up for a down move on the ETH ETF stuff across the board. We're just coming out of the gate in the week so positive that it kind of makes sense that we give some of this back. BTC could go back down to 64 this week, which is the daily cloud, daily Kijun. I just say that again because if the ETH ETF gets denied, which I think it will, BTC will sell off on that even though it shouldn't, and it's stupid. So I've got a light touch on leverage products this week until we see some news on that. So far, so good. On BitX, back above the 4-hour cloud. So we're definitely where we want to be, we need to be. MSTR is even higher today. The premium to NAV, or the NAV premium rather, is even higher today. It just doesn't make sense to me. It's not for me. I'm happy people are making money, but I just question the upside based on the NAV premium. I assume Saylor's going to come out, issue more stock, sell or buy more crypto, whatever he does. On trend, cloud looks great, pattern looks great. So everything's really cooking on the crypto side. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience, a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice: crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. Kraken Pro also has a wallet. Kraken has a great app for mobile. It has a great widget that I use. Literally the first thing I look at every day when I wake up is the widget on my phone. So if you want some quick way to check price for multiple assets, the Kraken mobile widget is great for that. A few wallets starting to pick up quite a bit. Sol back at 180, briefly 181. INJ is having a day, up quite a bit. Link had quite the week, down slightly on the day. FTM up quite a bit. Like I said, Thursday and Sunday, there were a lot of charts in altcoin land that sort of had this ranging triple bottom-y type chart. Not all of them are going to magically lift off together. AVAX comes to mind as probably one that has not lifted off yet. Yeah, so there's probably going to be some relative value rotation going on with some of these charts. So if you're trying to hunt around for maybe something that will play catch up, that's an option. For me, I just prefer to play strength. I prefer to play BTC and NEAR and Sol versus sitting and hoping and waiting that this stuff breaks out. It does look better than it did a couple days ago. There are a lot of charts that look like this. Doge is another one that has the similar is just sort of like broke down, ranging, inverted head and shoulders vibes. These look like they want to break up. I just don't think they have enough people buying them to actually break up right now. As BTC is breaking out, that's certainly the focus for the market. Once BTC likely pauses at all-time highs or retraces on ETH ETF denial or something, right? That's probably when we start to see some potential rotations. But just like BTC, for all these alt trades, they could see some crazy wick down this week just because they are associated with crypto. ETH still has this falling wedge type pattern where if I knew nothing about the news, this would be a long. So I don't hate it with the stop loss at local lows, or you just say, you know what, I'm going to eat the volatility. I don't care about the news. It looks good enough. Also one way to play this. As far as the legacy calendar this week, not too much going on the econ data side. Tons of Fed speak. We got NVIDIA earnings Wednesday. Snowflake earnings Wednesday. I'll take a look at that chart at some point here. And we don't have a Fed meeting until the 12th. So we have a little bit of breathing room before unemployment or CPI or anything that can sort of put a wrench in the works here. Market not pricing in a cut or a hike next meeting or the meeting after that. I'd imagine either in June or July, we will know for certain when we will see a cut or a hike. I say cut or hike because looking at the markets today, I can't imagine why they would cut. Hikes haven't been priced in for like 3 years now. So that would be a big surprise to the market. That would certainly put a wrench in the works. Definitely an if this, then that situation, not something to just trade around right now, but that's not an impossibility regardless of what probabilities are showing you here. We do have Trueflation ticking up since May 1st. So if we look at from May 1st to present, we have 2.22 to 2.5. That does represent an intra-month rise, whereas the previous months were declining. Will this be enough on the next CPI print to show up? And will that be enough to spook the market? Something to think about down the road, right? We can party now and deal with the consequences later. But if there's a reason we slow down on the next CPI print, it's probably because CPI comes in hot. CPI month over month slightly up, slightly down year over year. It's going to be one of these sliver of a slivers to decide this 0.01% for the market to make a decision. We probably have PCE coming up. That's also, depending on how you look at it, splitting hairs here. Certainly doesn't look like inflation is falling as rapid as it had been if we zoom out a little bit there's a potential, inverted head and shoulders on truflation. Based on all the commodities prices we're seeing, it's hard to think inflation keeps going down. So I don't know. I think we're just stuck, kind of stuck between 2.5%, 3.5% in perpetuity here until the next thing happens, whatever that happens to be. On the liquidity side, we aren't getting any benefits from reverse repo. That's pretty much done as far as the exodus out of reverse repo into debt from money market accounts. So the question becomes, where's the liquidity coming from, right? Where's all this new money coming from? Where's all the excitability coming from? This is probably something that the bears can hang their head on and say, we are a little bit overbought relative to liquidity, which I'd agree with, but the chart is the chart, and that's what I'm going to trust. GDP still hovering around 4%, 3.5%. The recession, based on the data, just isn't coming anytime super soon. Looking at the yield curve, we have, this will load here, we have pushed back down the belly of the curve. The dark blue is the most recent today's values across the curve. Front of the curve still where you want to live. The very front of the curve, the 1 month, is actually slowly here ticking down, like barely perceptibly, but it is ticking down. And the 4 to 6 month currently is the highest part of the curve. So yield curve still very much inverted. We're seeing less of a bear steepener, more of the short end slowly coming down. But again, we're just, we're splitting hairs here on percentages. There's not really that much going on a month-to-month basis on the short end. Here's the 10-2 curve, still inverted, getting more inverted. And the recessionistas really don't have much evidence yet that there's this disaster imminent. We've had the same 10 people that we hear from every month telling us that this is the month where the data gets worse, or the data's gotten worse, or some rule this, some other rule you've never heard of that. Okay, I get it. The data's the data, but we're not seeing that so far. And I think we'll get fair warning for that when and if the Fed starts cutting, when and if the yield curve rights itself. If we cut from a place of strength, to me, that's very different than cutting from a place of weakness. Usually we are cutting from a place of weakness, hence leading the recession, which is why the yield curve uninverting is the big disaster signal, not necessarily the inverted yield curve itself. Looking at TLT, the long end Treasury ETF, certainly looking less bearish than it had been, but still relatively bearish on the daily here. Roughly hit the target for the measured move, the 1618 fib of that descending triangle. I know some people trade this, so I thought I'd comment on it. The real chart, though, is BTC relative to anything, right? BTC relative to TLT. On the cloud, this thing looks ready for new all-time highs plus. To be fair to TLT, this is not the total return, but we are very much bullish on the BTC side relative to TLT. DXY, like I mentioned yesterday, had a massive down week, and that's what we want to see. Continuous weakness or ranging for DXY in perpetuity is how crypto continues to moonshot across the board. Majors more so than alts. Alts are liquidity starved, attention starved. Inflation is a problem. Retail having access to this stuff is a problem. Retail having money to trade this stuff is a problem. DXY could make a head and shoulders here, but if it gets into the cloud, bearish TK cross, that's kind of lights out in the meantime for DXY, and that's what we want to see once we start crushing local lows. That's Bitcoin new all-time highs. That's Bitcoin to 100K. If we get anywhere near 100 on DXY, that should be six-figure Bitcoin pretty easily. Back to the liquidity conversation. You can pull these up on TradingView. I will put the equations for this in the description of the video. Global liquidity, like I mentioned yesterday, from a look into Bitcoin chart, based on their data, it looks like, or looked like, we had hit a new all-time high. Based on this TradingView equation, not quite, but almost there. US liquidity has also turned up slightly, which means we are pulling money out of the TGA because we're not pulling it out of reverse repo. So we are spending, which is good for liquidity. And that's probably where the liquidity is coming from. Even though global liquidity is still basically flat. Certainly flat on a month-over-month basis, week-over-week basis. Maybe like a 3-month basis, it's up pretty considerably. As you can see from October to present, that's really where we've seen most of our gains across the board. in risk assets. So I wouldn't say this is bearish. It just could definitely look more bullish. There's an expectation that everybody's going to keep printing, liquidity is going to keep expanding. I don't think anybody globally in the central bank department is going to be cutting liquidity anytime soon. Looking at the S&P, probably, 2 weeks ago now, talked about this head and shoulders possibility into the daily cloud. And I said at that time this would be negated with a bullish TK cross, and that's what we've seen. We're at all-time highs. This could chop around, range around. Doesn't need to necessarily just continue from here. But if we measure this to the fib extension and the measured move, that's 5,500 plus. And it's very hard for crypto to be bearish if S&P is bullish, Qs are bullish. If everything in legacy land is bullish, it's unlikely that crypto is going to be going the opposite direction. Specifically, again, the majors, not your $500 bag of some 3-year-old altcoin, 3-minute, whatever, you get my point. Alts aren't going to have a good time broadly until liquidity comes back in a bigger way. BTC against the S&P also looks like a breakout pending, looks very bullish. Certainly tells me I'm in the right place, not focused on TLT or S&P and have a BTC preference. Q is also very bullish TK cross on the daily. You can look at all the fundamental metrics you want. To me, it doesn't really matter. Technicals are certainly on your side for bullish continuation. And if anything, the indices suggest liquidity has picked up, even though maybe liquidity hasn't picked up as much as you think it might. Certainly looks like there's plenty of liquidity out there to buy the S&P and the Qs. This measures to about 480, 490, something like that, just based on the high and the low of the range. No promises, but trend does look bullish once again. IWM on the 3-day, I don't know what Druckenmiller sees in this chart. I'm sure he's got some fundamental reason to have massive IWM calls. He's probably hedged in some way. I don't know what he's doing exactly, but this could still head and shoulders and go lower. It does look fine. It's not something I would touch or trade. It just to me looks like range chop at the top of a range. I think there's plenty of charts that look better that I'll discuss in a second. As an index, this IWM Russell 2000 just not for me. As we meander on to commodities, oil ranging sideways, great for the inflation picture, not so great for my XLE longs. Technicals on this just kind of mixed. They're range bound chop, right? At what point does the US government step in to refill the SPR? They probably don't do that before the election if they are going to do that ever. So no real concerns for runaway oil bullishness here. Gas prices in the US on average have ticked down continuously here week over week. Slowly, we're still within the wheelhouse of just barely above 2023, last year's print, certainly down significantly from 2022, up significantly from 2021, but no major cyclical concerns by the looks of it on gas prices. Looking at other commodities and metals, things have just been absolutely roofing. There's XLE. I still like the chart. I'm still in the trade. I think it looks fine. Ascending triangle still looks safe to me. You've got gold, which had a multi-year inverted head and shoulders. I would draw this with a rising right shoulder. I only mention that because you really don't see that too often. At least I haven't seen that too often. You see more of the WPM style IHS with just sort of the flat neckline, flat shoulders. Uranium also has a bullish TK cross on the daily. It's got a cup and handle, multi-year cup and handle. So all these look really good to me still. Gold is approaching its fib extension and measure move target of the inverted head and shoulders. Now it's got a broader cup and handle, much like uranium. That cup and handle is like a decade plus long. So it's still there, lingering. So it looks good. I think a lot of people are probably rotating out of gold into silver because silver was sort of lagging, has been lagging for a long time. It also has this massive macro cup and handle. It also had a multi-year mess of an inverted head and shoulders. This measures still significantly higher, as Jason Shapiro at Crowded Market Report keeps pointing out. Silver positioning is very crowded on the long side. The way this reads, based on who's long, who's short, he would not be long this chart. Generally, you want to be on the side of the commercials. You want to be on the opposite side of large speculators and small speculators. And usually things reverse when you've hit relative extremes. So we're getting there on some of this stuff, but it certainly feels like we're in parabolic land on commodities broadly. COPEX is another one that looks similar to WPM, has really taken off. That's copper. So metal's doing extremely well. Is it a supply constraint issue? Are people in data center land finally realizing, hey, we need these commodities to build out these data centers for power generation, for AI, right? Is that the next step in broadening AI across the world? Could be. Palladium and platinum. SPPP, here's another one. Look, this isn't stuff I look at every day. Shout out to Doppel for pointing this one out. Chart looks phenomenal to me. I'm a technical trader, so I see a cloud that looks like this. I see a chart pattern that looks like this. I like the trade. And yeah, are all of these a little overbought up here? Certainly, but that isn't going to stop me from entering a position. So if we make a hard pivot from commodities to Mag 7 and tech here, NVIDIA's got earnings this week. This chart is set up for highs based on technicals. Whether or not that actually plays out, I don't know. I'm not going to be playing this chart pre-earnings or probably ever anytime soon. Similar to 2023, this could just continue to range right at, I don't know, 800, 900, 950, whatever that is for the next 6 months. But this looks very good on the daily cloud. Certainly wouldn't want to fade this regardless of earnings expectations. BTC relative to NVIDIA, however, to me, looks like it could be bottoming. We certainly lost ground against NVIDIA since 2022. Not on a bull trend, to be clear, but this could be the beginning of a bottoming process for BTC relative to NVIDIA, similar to 2017. That's definitely what we'd prefer to see. And as far as trading NVIDIA or not, I would just rather trade near. I think it's AI adjacent enough, at least it moves with the AI stuff. This chart, as good as NVIDIA looks, near looks better to me. Bullish TK cross, price above cloud, inverted head and shoulders. That's just the season we're in. We're in inverted head and shoulders season. It's inverted head and shoulders spring, apparently. So I still like highs on near. Nice little check back to the neckline there. As far as the rest of the Mag 7, Apple's up 16% from the lows. It gone from looking quite bearish to announcing buybacks and now looking quite bullish. I don't know. I would never trade this. I don't trade this. Very much ranging. But once again, it's hard to imagine a bearish broad picture with Apple very near all-time highs again. Microsoft also very near all-time highs. It still has a potential head and shoulders risk, but on trend, it looks pretty good. It's getting closer to its cup and handle target, the old target from 2023. And it certainly looks like it's going to negate this head and shoulders just like the S&P did. Google all-time highs again today. Not the greatest looking daily candle. Perhaps a shooting star there on the daily. Measured move fib again reaches slightly higher. So I think a lot of the reason the commodities complex is maybe picking up too is because the Mag 7 stuff is, for the most part, just super, super expensive, overbought, relatively, right, compared to everything else. And the money's got to go somewhere. There's certainly tech investors who are staying within the ecosystem, maybe selling Meta or Netflix for Amazon or selling NVIDIA for something else. Then you've got people like Druckenmiller selling the leaders for the laggards, selling NVIDIA for IWM. But it just feels like the Mag 7 broadly is a little bit overbought still. Meta here kind of just looking like meh, nothing. You know, it's back in the daily cloud. Definitely better charts out there than this. Amazon still in its old inverted head and shoulders target. Doesn't look super exciting to me. Maybe a little concerning still. You know, if you zoom out on even the S&P, it's got a bear div on the weekly. A lot of these Mag 7 charts have a TK C-clamp on higher timeframes, as you see here with Amazon. Is this an eventual double top on Amazon? You know, I just would rather trade other stuff. But because these 7 companies make up most of the S&P, that's why you really need to have a handle on what's going on. Netflix looks great. All-time highs, not for me. Bullish TK, recross, price above cloud, bullish cloud. Looks real good on trend. And the inverse of that would be Tesla. You know, Tesla's looked like junk since January. Roughly reaching its fib measured move target from the triple top. Is this an eventual mega inverted head and shoulders in the making with a neckline at 200, right shoulder yet to be formed? Is this some sort of diamond bottom yet to be completed? Probably into Q4. It's trying to snake its way into the daily cloud. It's just been denied. Again, to me, there's just better charts to trade. You know, I would rather trade most of the commodities. I would rather trade BTC, NEAR, SOL. That at least I feel like I have an edge and there's a direction. Whereas this stuff, until it's back above the daily cloud, it's just not for me broadly. Onto some fintech stuff. Square still looks fine, just chopping around. Has been chopping around for a couple of years now. Not really much going on. Eventually, I do expect this to break out higher. Anything above 80, 85, it's probably go time. Cloud says we're almost ready. We're getting there slowly but surely into Q4. TOST looks great to me. Still sitting up there at highs. And a lot of these charts I've talked about for weeks still look good. Anything above a multi-year range is a good looking chart for me. Hood also above the multi-year range. Tested support, turning back up again. I like 35.40 there on TOST. I don't know. It could, all of this stuff could just crush higher, right? If liquidity just explodes, if the Fed doesn't hike and they just keep rates where they are, we could see just, you know, the everything rally continue. PayPal is another one that I talked about for weeks. It's really gone nowhere for weeks. I don't hate it as a setup, as a trade, something on the watch list. Probably moves with Square in Q4. You know, probably takes its sweet old time. Coin is a sensitive one for this week just because of the ETH stuff again. On the 4 hour, it is still in the falling wedge, below the cloud, nearing the bottom-ish of the pitchfork. I like bids, probably sub 200, 190, just in case things get squirrely on the ETH ETF stuff. But if I was on a deserted island, right? Again, I just keep coming back to this. This is a long based on the chart pattern. Not a breakout yet, but you know, if you're confident enough, you can take that trade. For the Bitcoin miners, WGMI, the ETF, as choppy as this is, it is slowly starting to maybe, possibly, potentially thinking about breaking out of the daily cloud again. Is this whole thing a cup and handle? Is this whole thing an inverted head and shoulders? I don't know. It looks less bearish than it did. To be clear, I'm not like turbo bullish on WGMI here or miners in general, but these are good things to see this starting to pick up again. You may see the miner beta pick up again. Looking at WGMI relative to BTC, similar to BTC relative to NVIDIA, this could be maybe, possibly, potentially a bottom for WGMI relative to BTC, which would say you'd expect miners' strength to come back relative to BTC. You can kind of draw this imaginary diagonal downtrend line and support line, and maybe we come back, and that's the natural place on a relative value to sell again. Definitely one of the more interesting charts to think about. Lastly here, Snowflake. I know nothing about this business, to be clear. I know nothing about most of these businesses, most of these coins. I'm obviously a technical trader. I like the chart, again, just like I like the palladium and platinum ETF, okay? It's got an inverted head and shoulders. It's chopped around for a couple months now. I think on the last earnings, it just sold off incredibly hard. So I like this potentially like 180. It's got earnings this week along with NVIDIA, something else to watch for. This is kind of a binary event. You know, either the earnings are going to be god awful again, guidance terrible, whatever, and it's going to sell off, or we have some mild upside. Looks okay. We had a similar setup that I didn't take the trade on CRM, which was Salesforce. Had a nice little breakout on low time frames. So at this point, I think there's something for everybody. If you like the coins, there's BTC, Sol, NEAR. If you like legacy, there's plenty of commodity stuff to trade. Some interesting fintech plays. There's some news volatility stuff this week. So if I missed anything, let me know in the comments below. If I missed your favorite macro chart or your favorite legacy chart, I'll take a look at that next week. Just let me know in the comments. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.